Hi, Stuart Bruce here, and I am the Spare Time Property Investor. In these podcasts, I'm going to share tips, tricks and lessons that I've learned and will hopefully help you, especially if you're still working the 9 to 5. Hello and welcome to another episode of the Spare Time Property Investor podcast. This week is the Power Team week, so I've got 3 episodes for you. I interview a mortgage broker, an accountant who specialises in property, and a solicitor who specialises in property. And the idea is once you've listened or watched these episodes, you'll know what to watch out for and what questions to ask to make sure you're getting the right people to help you move your property investment along. So here's the interview with Joshua Tharby, a massively experienced accountant who's also a property investor and specialises in property when it comes to his accountancy. As with the other interviews in the Power Team series, he shares what he does as an accountant, but also what to watch out for and the questions to ask when you're finding your own accountant to help you move your property investments along. So without wanting to waste any more time, here is the interview with Joshua. So thanks again, Josh, for coming on to the podcast. This is a little bit different to my normal interview episodes because today we're focusing on you as an accountant, which is one of the roles from the kind of Power Team. So it would be great to start off with by introducing yourself and giving us a bit of a background about you and you as an accountant.
Yeah, absolutely. My pleasure. Thank you very much for inviting me on. So yeah, first and foremost, I'm a property tax specialist. So by this, I'm an accountant by training. And I also now specialise and work with property investors solely. Outside of this, I'm a property investor myself. I'm following the BRR strategy around the Peterborough area, which is fantastic. And I've been running my own practice, JSM Partners, for just over 2 years. Prior to this, working in some of the larger accountancy firms.
Great. Okay. So just so people understand exactly what you mean, can you just kind of give a bit of a rundown of what BRR is? Especially from an accountant's perspective as well. That'd be really interesting.
Yeah, 100%. So it's buy, refurbish, refinance. So I'm not doing it to the fullmost extent because finding good deals is probably the hardest bit about the strategy, where you can pull all of your money out. They're like unicorns. So most the deal I've got at the moment, I'm even got about half of my money in. I'm planning to. So essentially, you buy a property, you add some value, and then you refinance it later on at the uplifting market value, with the aim of pulling out as much of your initial money that you put in as possible.
Yeah, no, that's great. And like you say, they're difficult deals to find. And I think it's one of those areas where you can get really hung up on trying to get 100% of your capital out and then just kind of leave another deal after another deal after another deal and kind of end up with nothing. So no, it's great. You're kind of comfortable with that level of capital being left in the property. So how did you decide on that as a strategy just before we get into the kind of the accountant kind of side of it? How did you kind of decide on that as a strategy for yourself?
Yeah, I kind of wanted something that was a bit better than vanilla buy to let, the usual way you just buy something at normal value, you put a tenant in, then you get a reasonable yield. I wanted something that way I could add a bit more value on the start, kind of make a bit more of a profit. And unfortunately, I've not got an unlimited pot of money, so I did need something that, I did need something that was going to kind of help make the pennies go as far as possible. And that's where BRR came into it. Is that in order for me to get to the plans I wanted to, and the number of properties, income requirements, I needed to stretch this initial funds that I've got as far as possible. So BRR was the best one for me there.
Absolutely, yeah. Sorry, my dog's going crazy in the background. No, I think it's such a good. Yeah, absolutely. I think that's it's a great strategy, and it's something we're kind of we've done a little bit of, but we're kind of going back into. So yeah, and again, it's one of those. Sorry. It's one of those areas because we've been struggling to find properties that would work as well as we'd like to for HMOs. So then the BRR model is kind of, again, it's better than a vanilla buy-to-let, but it's just a different way to kind of find and make it work.
Absolutely.
Isn't it? Cool. Okay, so into the questions then. So what do you think are the main benefits to property investors and landlords for working with an accountant rather than kind of just getting the end of year accounts to be kind of dealt with and things like that?
Yeah, absolutely. So I suppose this is proactive tax advice, essentially, is where we encourage our clients to speak with us as often as possible. So as soon as they're looking at a new property, they're looking at entering into a joint venture, to pick up the phone and speak to us. So just an example, literally today, before I jumped on this interview, working with a client of ours who's just purchased a property through probate,
Okay.
sorry. Yeah. And they were completely unaware of the stamp duty reliefs that might be available there. Whereas because they've spoken to us before the transaction took place, so not at the end of the year, we've been able to work with them and see how they're going to be paying no stamp duty whatsoever on this particular property, a saving of just under £3,000 in cash, because we're going to help them claim this probate relief as a result of basically working with us throughout the year. Whereas if they had come to us at the end of the year, said, Josh, can you do our accounts? We'd say, yes, absolutely. But it's too late. The ship sailed on this one. We can't go back and change that stamp duty claim.
Yeah, absolutely. And that's one example, isn't it? So probate, I mean, are there other kind of things that people might miss out on that they're just not aware of, that they might kind of be able to kind of, I don't know, be able to get if they were working with an accountant throughout the year?
There are countless examples. Another one might be, say, for instance, a lot of people who start their business in the early days, they don't take any money from it, but they might be working full-time in their business still and just living off savings. So in these cases, your personal allowance, your dividend allowance, your saving allowance, all of these allowances are going completely wasted. But having an accountant on board would say, hang on a minute, yeah, we're going to claim these allowances. You don't actually need to take cash from your business because that's not what you want to do.
Mm-hmm.
But we're going to build up your director's loan account, which is the amount of money your company owes you, and you can take it at a later date tax-free.
Yeah.
So it's just about getting those kind of little bits. It might kind of be a couple of thousand here, a couple of thousand there, but over the course of 1, 2, 3, 4, 5 years, having that proactive advice many times a year. But when it comes to take money out of your company, we've got clients who have got £100,000 now in a director's loan account that they can take out tax-free just because we've worked with them to build that loan up as early as possible.
That sounds very good. Yeah, it sounds very worthwhile working with someone like yourself who really knows the ins and outs of how to make the most of the tax allowances and everything like that. So yeah, brilliant. Okay, so what are the kind of most common mistakes you see, like especially property investors and landlords making when they're investing, and like you're saying, you kind of get to the end of the year, say, can you do my books for me, but then for the rest of the year they're just kind of bumbling on themselves. What are the most common mistakes you see?
So I suppose the biggest one is probably not knowing how much money they've actually made. So a lot of people, they kind of just take money out of the company, whereas a lot of people don't even know that in order for you to take a dividend from your business, the company must have profits. So if you're doing BRR, for instance, the only profits you're going to actually get are on the rental income. Even if you have an uplift in value, because you've not sold that property, that doesn't count as a profit.
Mm-hmm.
So that's the biggest one, is when it gets to the end of the year, we say, unfortunately, you've taken £30,000 out of your business. Now we have to look at maybe putting that through as a salary, which is pretty expensive, or other ways we can potentially treat that. So that's one of them, is basically not having good access to bookkeeping finance software. So you don't know your numbers. All of our clients who work with us, we give them set up on Zero and Receipt Bank, which is fantastic for making sure that you're running your property business like a business at the end of the day. Our clients that do the best are the ones who treat it like a serious business, monitor their numbers, look at their reports, look at the profit and loss account, and know exactly what's what. So that's definitely where they go wrong, is they don't treat it like a business. They don't have access to this software. So that's probably one of the biggest one.
Okay, great. Okay. So going back to your own investment then, so the BRR, so is that why you ended up kind of specialising in property as an accountant, or did you kind of make a conscious choice first to kind of go down that route for, which came first, chicken and egg sort of?
So it started way before then. It started probably when I was about 14, 15 years old.
Oh, wow.
And when I used to kind of be sick from school, and I used to watch Homes Under the Hammer. And I was watching as a teenager, thinking, these people have just made £25,000 for 6 to 8 weeks work and doing this flip. Why do I need to go to school when I could just be doing this? And that what really got me interested. Then after that, I went to university, worked in accounting, and then it's basically a combination of that whilst working in practice as an accountant and also being interested in property. The two kind of followed each other because that interest was always there.
So was it purely Homes Under the Hammer, or did you have any family members or anything else like that who kind of did property, or was it?
I think it's fair to attribute it to Homes Under the Hammer.
That's great. One of my one of the people who've been on the podcast, actually, they're going to be on Homes Under the Hammer very soon. I can't wait to watch them.
Yeah, it's a surprisingly watchable show. I mean,
Yeah, it's great.
People give it a bad rap, but I think it's a good show.
I love the music choices personally. Have you ever noticed the music choices are just so like literal? I have to, yeah. I always kind of think they must have somebody in the background who's got their really got their head screwed on with that side of things. Cool. Okay, so did you have a mentor or anything like that to start getting into property, or was it something you just kind of, from your understanding of tax and things like that, or how did you?
So there's not really been a mentor, so to speak. I never had any paid for training or anything like that. I think a lot of it kind of, it sounds, a lot of it is kind of common sense almost. Is that I think if you've got a bit of business acumen, you kind of know to shop around on prices, to check stuff before you go view it. I'm kind of quite risk averse as an individual. So I was trying to do as many checks as possible, as much due diligence. Thankfully, I've got quite a few contacts, especially now when this refurb is going on the way. So I do have people that are much further ahead of me in their property journey that I can reach out to and speak to and ask questions, which is definitely valuable. So I can understand the importance of having a mentor or somebody who's just a few steps ahead of you, just to make sure that, is this tradesman's price fair and reasonable? Am I getting ripped off here? That alone is invaluable to have.
And I would assume that from your work as an accountant, you must meet all those people, and people who are just a couple of steps ahead of you. So is that the main way you've been able to build up a network?
Yeah, I'd say that's definitely helped. So a lot of my clients are just, it's great to speak to about property. Especially because we've got clients that have kind of just one or two properties, all the way up to kind of 50 plus. So it's great to speak to them, see what their commercial insights are, see what they're doing. And when I'm speaking to them just about property, they're always happy to kind of chip in and give their thoughts as well, which is fantastic.
And I find property quite an open, quite I don't know, quite a nice place, and people seem to be quite happy to share their knowledge and contacts and stuff like that. It doesn't seem as guarded as some other industries. I don't know how you found it.
I definitely agree. I suppose for most of our industries, it's almost like everyone's keeping this kind of trade, all their trade secrets close to their chest. Whereas with property, it's nothing new. Property's been around for hundreds of thousands, many thousands of years. So there's nothing new going on here. So everyone is much more open and much more happy to share.
Yeah, no, I found it really nice since I've started kind of getting to know people in property. Everyone just seems quite relaxed as well, and it's not as cutthroat as some other.
Absolutely, especially with all the Facebook groups and all the forums. I sometimes don't know what something is in a property. You post a picture on there and they're like, this is what it is. You've got so many people who are experienced, and they're just more than happy to answer questions and share their knowledge.
No, it's really good. It's really helpful. Cool. Okay. So for people who need to find themselves a decent accountant, what do you think people should look for? What tips would you give to somebody to find a decent accountant with specialist knowledge of property, especially?
Yeah, absolutely. I'd say go on recommendations, recommendations alone, and then actually speak to the accountant and make sure that you can have a conversation with them. Because of a lot of accountants, they talk jargon. A lot of people struggle to actually speak to their accountant. Some clients come to us and say, I tried speaking to my old accountant, but he just confuses me even more. I feel stupid asking these questions. End of the day, my job is to answer your questions. So you should never feel stupid asking me a question. So definitely make sure that you can get along with them as a person. And then aside from that, do try and make sure that they do specialize in property, that they do understand what you're doing. See if they're happy to share some initial information that's actually going to help your business before you go on board with them. We're always happy to have a discovery call with everybody, just to make sure that we can get along with our clients at the end of the day, and that we can actually help them. Yeah,
absolutely. And there was something in there about making sure they understand property is one of their kind of specialisms. So what would you regard as one of the pitfalls of getting an accountant who doesn't really understand property investment?
If you have a client that doesn't understand property, I can almost guarantee that you will be paying too much in tax.
Yeah. Yeah.
Yeah,
Simple as that.
that's the bottom line. Yeah, they won't know the reliefs that are available. They won't be able to educate you. They won't be able to say, yeah, you know what, this probate relief might be available. You could get this 5% rate of VAT here if the property's been empty 2 years. They just won't know this kind of stuff to tell you. And as a result, you will be paying too much tax. That's definitely the cost of not having a property specialist.
Yeah, so absolutely worth doing that due diligence to make sure that accountant knows their way around property. By the sounds of
Yeah.
it, definitely. And getting a recommendation, like you're saying as well. Cool. Okay. So everybody at the moment seems to be buying properties in limited companies, especially since the changes of a few years ago. Would you say that it's always the right thing to set up a limited company to buy properties in, or are there some circumstances where you would, as an accountant, say, well, just buy it in your own name?
Yeah, absolutely. So yeah, a limited company isn't the best way to go. We speak to people who have been told, yeah, okay, great, transfer your current property to a limited company. But when you actually look at it, they don't want a vast property empire. They're quite happy with the 10 buy-to-lets they've got that are giving them £40,000 a year. So when you speak to people like that, and especially if you've got a husband and wife, they might want £100,000 rental income, so they're not high rate taxpayers. When you look to put a limited company into works, they're going to be paying more tax overall. They're going to have higher finance costs. So overall, they'll have less cash in their pocket than they would if they'd have kept them in their own names. So absolutely, a limited company isn't always the way to go. It quite often is if you want to grow a big kind of property business. You want hundreds of properties. You want to really scale, and you don't need the money to live off now. But for some people who are just getting started, you don't even know if property investment's actually for you. You just want to kind of dip your toes in the water, or if you're looking to perhaps leave your employment income to build up that property income to replace your income, then maybe keeping it in your own name is going to be for you. So by all means, don't just jump straight into a limited company, because it is more expensive to get finance, and it is more expensive when you're looking to take the money straight back out again to live off personally.
Absolutely. I think it's just one of those things as well, especially on podcasts and stuff like that. It's almost like a trend, everyone needs to go and do this thing. And I don't think people quite understand why they need to go and do that thing, and it's just, everyone needs to go and get themselves a limited company. And,
set a limited company up and take a picture with their certificate of incorporation. But done it.
Absolutely. And also that point about, people who want to build a huge portfolio, I'll challenge people to actually consider whether they do want a huge portfolio, because once they've got a certain amount of money, will they continue putting in the hard work to continue to build that portfolio?
As soon as you've got kind of £50,000 a year coming in, or £100,000 a year, it's very easy to get comfortable.
Yeah. So it's all those that limited company and everything like that would, potentially been a bit of a waste of time, and
quite possibly.
Yeah. No, it's great. It's great to hear the other perspective, really, because I don't think these things really kind of get on the podcast and stuff I listen to. It doesn't really get kind of spoken about that much, because it's just like kind of a shared wisdom that everybody needs to set up limited companies to invest in property. So yeah, cool. Okay,
definitely.
So there's a lot of people as well who get into property who want to leave their jobs, and you made reference to that just then. Do you have any kind of advice for people who are planning to leave their jobs? Things that they need to do in preparation to leave their jobs, and what are the kind of other kind of potential pitfalls of jumping too early or anything like that?
Yeah, I'd say with properties, it's quite easy, especially kind of looking at what happens with clients. And the like. So with property, it's not really a quick solution. You can't just go full-time property. I definitely do think that you need to work into it, whether that's go part-time and then build up that property portfolio, because it could be for 6-9 months even before you get your first deal. And if you put yourself in a position where you've left your employment, you've got no income, all of a sudden you start to become desperate and take on deals which you otherwise wouldn't. So it's all about making sure that you do have a plan. You've got enough cash as a contingency. But property investment itself isn't incredibly time intensive. You can set times aside to call agents, go to viewings and things like that. But you don't really need to go full time in property straight away.
Absolutely. And do you think with that desperation, I totally get you on that, because if you're desperate and then you go and get a deal, I mean, you're potentially holding that deal for, say, 25, 30 years. If it's not right for you, that's a long time for it not to be right for you. So you have to make sure you're not desperate when you're making those choices.
Yeah, 100%.
But so in terms of any preparation people could or should make, in the kind of preparation for leaving their job, is there anything in particular people should look to do from a tax or accountancy?
Yeah, so from a tax point of view, definitely if you actually leave your job partway through the year and you've not got any other income, you can look to accelerate the tax you've paid. So when you get paid through PAYE, they take some tax off you through that. When you leave your job, I think it's called a P800, I think it is on the HMRC website. You can actually get that back as a bank payment within a couple of weeks after leaving your job. So that's definitely something which is a short-term cash flow bonus rather than having to wait until the end of the year. So that's something that's worth looking at. And also, if you do have a limited company, look at whether it's worth starting to pay yourself through your limited company now in order to utilize your personal allowances, charging interest on your director's loan account, and making sure that you are maximizing the amount of expenses in your property business. So when you do have a profit, you can just take that cash out with minimal tax implications then.
Great. Okay. And how about if you happen to be self-employed or a business owner, and maybe you're putting more and more time into property? Are there any kind of tax or accountancy considerations for people who are self-employed or a business owner?
Not necessarily, no. So because of the way it's taxed, property businesses and kind of trading businesses and your self-employment, they are kind of taxed separately. So there's no ability to, if you've had a loss, for instance, in your property business, you can't offset that against your trading businesses and things like that. So there's not too much from it from that point of view.
Okay, that's cool. Great. Okay, that's really, really helpful. Cool. Okay, so have you got any, so these are like the normal questions now. Have you got any of your, have you got a favorite property or business book you go back to or you found really inspirational?
So I think probably one of the best books I've ever read was The 4-Hour Work Week. Just because it opened my eyes to kind of business systems, outsourcing, being really time efficient, the whole kind of VA thing. That was definitely the one for me, and just shows you how kind of easy it could be to actually grow in business. Another book might be. So the E-Myth was also pretty good about making sure that you get your business systems right. I've not really read a whole host of property books. I've read is it Rob Dix's one about I think it's The Ultimate Guide to Property Investing, or someone on those lines. That was a good book.
He really
definitely 4-Hour Work Week.
Yeah, no, I love that book. I feel like it's something we've been doing recently, and I feel like I read it a couple of years ago, and I feel like it's kind of seeped into some of the stuff that's happening more recently. It's such a great book, and I love his podcast as well. Tim Ferriss, he's nuts. It's like a little kind of experimental human guinea pig thing, isn't it?
Yeah,
it's great. Cool. And do you have any kind of favorite tools, any bits of software, anything like that you use all the time?
Yeah, so Xero. I wouldn't be an accountant unless I said Xero. So
you get sponsored as accountants. You get sponsored by Xero.
Well, I've got a roller banner in my office, if that counts.
Oh, well, okay, maybe.
Yeah, absolutely Xero. So I've got a couple of different businesses, and just being able to see what my profit is, what quotes I've sent, what expenses there are, all in one place. So I can do it on my mobile phone. I can see the numbers when I'm on my computer. Having that software there that gives me that information is definitely really great, and especially it helps you grow your business in the day because you can monitor where your costs are going and keep on top of it.
That's great. Yeah, cool. Okay, so then I think from what you were saying, I think you'll be able to answer this in a different way, because it's, by the sounds of it, you're already watching Homes Under the Hammer when you were 14 and all this sort of stuff. So one of the questions is, if you could speak to your 18-year-old self, what advice would you give them? So by the sounds of it, you're already kind of on course to doing what you're doing now, or do you think that's, or do you think?
I'd probably say just be patient, because even now it's so easy to kind of want everything now. And you think, oh yeah, I want a better car. Why haven't I got a Bentley yet? It's so easy just to kind of think these things. Whereas realistically, if you say, for instance, my 18-year-old self, just keep doing what you're doing. Just be patient. It will come. Don't worry. And I'd say the same thing to myself today. So it's just, do I need a bigger house? I'm only 26 years old at the moment. It's fine. Don't worry about it. It will come when it needs to be there. So just be patient and keep doing what you're doing.
No, it's great advice. Cool. Okay. Well, that is the interview. That is the episode done. So it'd be great to kind of keep in touch, and I'll definitely kind of keep an eye on what you're up to on Instagram and things like that. But where can everybody else find you on the internet?
Yeah, so absolutely. Just type in Joshua Tharby, YouTube. We're putting a lot more content out there now, especially property related stuff, interviews. I'm going to start doing book reviews on there as well, giving you tips on kind of the key takeaways from great business books, Facebook, Instagram, where else am I? So we've got a Facebook group as well, Property Tax Secrets. You just type Joshua Tharby into whatever site you're on and I'll be there.
Great. And I'll make sure the links are in the show notes as well, so people will be able to find you. So that's great. Well, thank you so much for coming on. It's been really, really great. And yeah, I think getting your perspective from kind of an accountant's point of view has been really, really great. So thank you again for coming on, and I'll see you again soon.
Yeah, it's a pleasure. Bye for now.
Thank you so much for listening to my podcast, and I really hope you enjoyed it. If you have, please leave me a 5-star review to help other people find it, and don't forget to hit that subscribe button.